Hey guys, welcome back. Now, after a brutal sell-off in the crypto market this week, does this mean the worst is now over? Well, Bitcoin has already shot back up to its trading range between 60 and 70,000, so the big question is, what happens next? And so in this video, we'll be covering the latest price action and what a week it has been. Then we'll take a look at the bull market tracker and see where we are in the cycle and what may be coming next. And then we'll finish with the biggest developments from all around the world. And in the last week, there has been some great ones. Okay, so with all the craziness that's happened this week, let's begin with the latest price action. So jumping over to Bitcoin's price chart, and what do we see? Well, the massive flush out that happened in the past couple of days. And this was mainly due, and as I went into more detail in my last video, markets have been getting way ahead of themselves. The S&P storming up, going up twice as fast as normal. Everything was getting overheated, and then as usual, all the people maxing out with leverage got caught out with the Japanese carry trade, and there was a massive vertical flush out of leverage. So let's just take a look at the damage of some of the coins that I regularly track. So starting with Bitcoin, it had just touched that resistance of 70,000 before having a nice 30% flush out. Now, when it comes to Ethereum, it had just had its ETF launch, and what happened? A nice 40% flush out. Solana just pierced through resistance and then flushed out about 43%, so only a little bit more than Ethereum. And then let's just take a look at Coinbase. Again, touched the resistance and then came down about 40%. That's a pretty big flush out for the top coins, and the smaller coins will have been hit even harder. So the bigger thing going on right now is monetary policy. And everyone's taking a look at what the Fed is going to do at its next meeting. And essentially it's saying that it's close to a 50-50 split whether they're going to cut by a quarter point or a half point. But as you can see, they've been holding rates higher for longer. And ever since the year 2000, whenever they've done that, it's not been good. So this was higher for longer, and what happened? We had the dot-com crash, massive recession. Higher for longer, what happened? The great 2008 financial crisis. They tried to go higher for longer, and obviously we had the pandemic, and here we are right now. So the Fed really needs to start cutting rates, or else bad things happen to the economy. So a couple of big dates coming up. First potential cut is coming about 5 weeks from today, and the next CPI prints are going to be really important. We need a low number on the CPI. Next CPI for the US is coming in next week, and then there's one more the week before these cuts. So we really need to see US inflation coming down in these next prints, then we can begin cutting, and then it's game on for crypto. Now, going from the daily charts and zooming out to the 4-year chart. And we're going to do something a bit different this time around. First up, the biggest comparison to what is going on now is what happened here. And essentially, if you get these massive vertical moves which take you way above the previous cycles, it's a massive red flag. It gets way overbought, the market gets way overheated, and then pain then follows, bringing it back down below the previous cycles where it should be. And essentially that's all that's happened here. We were tracking the other cycles quite nicely, so it's meant to be around this range, but then what happened? We have a once in a lifetime launch of the Bitcoin ETFs, shoots it way higher above the previous cycles, and then it's a double-edged sword. You get the elation of making all this money in such a short time, but then a very painful period where it has to come back down, ideally below these market cycles, bringing us back to a more fair value. And then this is where we're at right now. So that's the double-edged sword of making loads of money quickly and then having to pay the price. And as mentioned before, I'm more of a fan of just slow and steady growth. Yes, it's a bit slower, but the ride is much more enjoyable. So now we're going to do something a little bit different as it highlights some more insights from this chart. Firstly, we're going to knock out this first cycle, and this is the dollar cycle when Bitcoin was just $1 and then ends up going over 230x from its bottom. So far ago, it's not that useful. So what we're going to do is we're going to pick things up from the halving and we're going to draw a trend line. So because we know where the price was at the halving and we know where the cycle finished, we can draw a nice line of what a fair value of where the price should be as it goes to the cycle top. And then what this shows is that there are times after big flush outs where the price becomes attractive compared to where it should be as it goes into oversold territory. Then sometimes in the massive runs, it goes into overbought or overvalued, and then we get a crash back down to fair value. So as we can see, ideally this is what the price would be, but because of fear and greed, it's never a straight line and it deviates. We get these massive runs, we get these massive crashes back to fair value. This time we had a huge run higher, a big crash right back down to the line. Same thing happened again. Massive epic run, which means you have to get a crash back down to fair value. Now let's do the last cycle. So the last cycle was in green. So obviously we know the halving price and we know where it ultimately topped. So let's just draw a nice fair value line. Would be something like this as it goes with a blow off top. So in this last cycle, again, you can see after the halving, this orange cycle here, a very turbulent time, and it actually spent a lot of the time crashing down below where it should be. So after the halving, these months, very, very turbulent. Similar with the last cycle. Now, obviously, there was this massive COVID crash, which was a huge anomaly, sending ripples in the market. The first couple of months, few months after the halving was a very turbulent time, but then this time the market went absolutely crazy. So this is because of the insane amount of stimulus that happened during COVID. You remember when everyone was also forced to stay at home and then the government sent people checks in the mail, and we had one of the biggest liquidity cycles that's ever been. So this time the market went on an absolute tear, way higher than where it should have been, with fair value being all the way down here. It even outpaced the previous cycle, which already had these ridiculously epic runs, so way higher than where it should have been. And what happens? You get a big, painful correction all the way back down. This time didn't quite meet fair value, but ultimately that's where it finished. So again, each cycle is very unique. Now let's draw on what this cycle may look like. Now this time around, we do have the price at the halving, but we don't know what this is going to look like. So this is a bit of speculation. Now, because of diminishing returns, you saw the first cycle was like 230x from the bottom, next one 130x, then it went from 130x all the way down to a 20x. So I'd say my base case is that we're probably gonna be between a 10x and 15x, with Bitcoin chasing about $200,000. So based on this assumption, the line is going to look a little something like this. Starting out similar, it then has to come under the previous cycles to get these diminishing returns before getting this blow off top. So it's something a little bit like this. So what do we see? Well, it was majorly overbought, setting records before the halving. So it was ahead of itself. We've come back. We went briefly below the fair value, and this is where we're at right now. And Bitcoin has since come back a little bit. So ideally, we'd want to be tracking this line. It's at this point where we'd come back under the previous cycles, which is healthy and where it should be. And then it looks a little something like this. So as of right now, because of the 4 months worth of pain, we're actually pretty close to where we should be. Now, the next 30, maybe even 60 days are going to be the most testing. Anything can happen here, as we see if Jerome Powell's high rates are going to cause another crash in the next 5 weeks. It's certainly possible, but if it does, this will likely be the last best buying opportunity for this entire market cycle, as it will now be below the value line. And then once we get to about here, we're going to start getting some epic moves, especially if Trump wins in November. And finishing up with the biggest developments from all around the world, and the past couple of weeks there's been some great ones. Obviously we had Trump at the latest Bitcoin conference, and he could not have been more bullish, saying that he wants the US to be the crypto capital of the planet, saying he's going to have a strategic reserve of Bitcoin, saying he's going to fire Gary Gensler pretty much everything that crypto needs. So if I was a citizen in the US, I would certainly be voting Trump this time around. He then went on to launch some limited edition Bitcoin sneakers, which sold out in minutes. Bitcoin sneakers coming from potentially the next US president is hilarious. And then most recently, as of today, Donald Trump Jr. has been talking about launching a crypto platform in DeFi to take on the banks. So this is incredible to see from Donald Trump. Then when it comes to the Harris campaign, they have been getting together on a weekly basis to discuss crypto for Harris. And the meeting that happened over Zoom just yesterday, as far as I can see, it was just the crypto people bashing everything that the Democrats had done to crypto over the past 4 years. And the voice from crypto is that do not wait until November. If you're truly for crypto, then start making changes from today. That being, drop all the lawsuits, fire Gary Gensler, let banks custody crypto, etc., etc. So the problem with politicians is that a lot of the stuff is just words, but what crypto needs is action. And so far, the Democrats have been terrible for crypto. Now, flying over to Russia, and probably because of everything Donald Trump has been saying, Vladimir Putin is also getting into the crypto scene. Recently, he signed in a new law legalizing crypto mining. And then most recently, he's also allowing crypto payments in international trade. So Russia opening the doors to crypto. Then when it comes to the UK, we had Fidelity launching a Bitcoin ETP. This is an exchange traded product on the London Stock Exchange. So unfortunately, this isn't for retail investors, it's for professional investors. So it's still early days in the UK. And in fact, the banks in the UK, I can speak from firsthand, are still very much against crypto. In the last big flush out, I tried to buy the dip. I took a relatively small amount of money from my bank, tried to deposit to Coinbase, and I got a message again saying, "We have blocked your payment to help keep you safe." So still the banks are blocking people from even being able to buy crypto. So it's still very early days in the UK. Luckily, I was able to transfer the money out to a third party, which they can't stop, and then from the third party into Coinbase. So still able to do it, though it was a pain in the ass. Now, big news, as one of the big wirehouses, in fact, the largest one, Morgan Stanley, has now let their army of 15,000 financial advisors start pitching the Bitcoin ETFs to their clients. And this has now just gone live. So this is excellent to see. And then to finish up, with some good news for certain chains. And this one was for Avalanche. And this is what we want. We want use cases. So the California DMV, which is the motor vehicles, they're putting all the car titles on the blockchain. So 42 million car titles have now just been put on the Avalanche blockchain. So use cases, great to see, and great to see for Avalanche. XRP rocketed 26% as the big court case between Ripple and the SEC was finalized, and XRP believes they won, the SEC believe they won, and there was pros and cons on both sides. So from XRP's point of view, their sales to retail customers did not break any security laws, and XRP is not a security. And the fine they had to pay was many multiples below what the SEC had asked for. So they claimed a victory. However, from the SEC's point of view, they did get fined for selling XRP to institutional investors, which did break securities laws. And then the fine was a lot higher than what XRP had wanted. So they too also claimed the win. I think in general, this is a win for crypto, as XRP for retail customers is not a security, and that is great for all the other lawsuits going on right now. And then finally, some great news for Solana. It appears the next ETFs that are going to be going live. There was a lot of speculation of who it was going to be. Was it going to be Solana? Was it going to be Cardano? Was it going to be XRP? Well, the Solana ETF has just been given the green light in Brazil. And as we already know, in the US, Solana ETFs have been filed. So it looks like Solana is next on the list. This last week has been a bit of a tough week for investors, especially crypto investors, as many of the top coins saw a big flush out of up to 50%. The next 30 days are a critical time in this market cycle as we begin to transition from a high interest rate environment back down to the normal levels, and we're just 5 weeks away from the first Fed cut. And just know, historically, this has been a very turbulent time for risk assets. The 4-year cycle revealed some very interesting insights as the market goes from overvalued to undervalued around the fair value line. As for a market top, my base case is between a 10x and 15x from the market bottom, which means a price between $150,000 and $250,000 for a Bitcoin. However, I think it's the $200,000 mark that's going to be the big number that is chased, but doesn't quite reach. Alts now appear to be in the bottoming process, with the last big flush out being best case scenario, or maybe the next 1 to 2 months as a worst case. And as you saw, crypto developments just keep on coming in from all around the world. Crypto's getting adopted, it just takes time. So there you are guys, hope you enjoyed. Now, even though there was a bloody crash this week, I can't help but feel bullish for the coming months. But just remember, the next 30 days could still be quite turbulent. Now, any questions or comments, leave them below. However, just remember to get rid of 100% of the comment spam and trading bots that plague YouTube comments. We are trying out the new SuperThanks Commenting system. So to get your question or comment read and replied to, or just to say thanks, then use SuperThanks below. And for now, just to say, if you did enjoy anything in the video, then drop a like, and a big thank you to everyone who does, and I'll see you in the next video. Bye for now.